Thank you, everyone. As usual, we're going to start with a very quick summary, and then Paul will take over to discuss the financials, and I will then come back about the business update and strategic update with Q&A. Some very high-level highlights. Clearly, overall, very bearish investor sentiment, subdued cash trading turnover as a result. So overall, this is a phenomenon both locally and globally. So the first half, 2016 profit after tax was down 27% year on year, on the volume down close to 47%, and increased future derivatives, however, is the bright spot that offsets some of that decline. On the IPO fund raised, again, we are currently number one IPO by a meaningful margin, although the overall size of the fund raised is still quite small. Be careful over there. Earlier in the year, we announced a 3-year strategic plan, and there are a lot of items there. So I'll be very happy later on to give you an overall update, and then you can ask me questions on that. And there are a lot of also products and business update that I will run you through after the financials. And with that, Paul.
Thank you, Charles. I stood up here last year, I remember, and I was able to tell you about a fantastic record-setting set of results where we had ADT in the quarter of $164 billion. Quarter 2 this year was $100 billion lower. So these results should not be a surprise to you. When you've got a tough set of comps like that, and it's going to happen for the rest of the year, Q3 and Q4, we're always going to be comparing against that record level. And what I'd like to explain to you today is actually, within these results, they're actually not as bad as you might expect. We are down 18% on revenue, but our headline ADT was down 46%. So actually, revenue is down probably less than you might have expected. As you look at OPEX, it's gone up by 7%. If you take out some exceptional items, it's only up by 2%, so OPEX is under control. EBITDA margin has come down, but if you look at the margin of 70%, it's 7% down on the equivalent period last year. But if you looked at our half-year results last year, when I was standing up here, I announced an 8% increase. So actually, we've returned to norm, and I'll show a graph later or a chart later that shows the quarterly trends and this bump in 2015 and our results coming back to the norm. You'll see on there, across the top in the percentages, there's 2 lines of numbers, and that's just so you can back out some exceptional items that were in the results last year. In total, 89 million was added to our bottom line from 2 items: a rebate we got from Lehman's, the liquidators of Lehman's, and the sale of the residual shares we had in LCH. So a little bit of an adjustment to those numbers to do a like-with-like comparison. The bread and butter of our earnings is clearly the cash market, but what these results show, I think, is that the diversification of our income is starting to have a real impact. If the cash market is down by 46%, why is it our revenue is only down by 18%? And the answer is that less than half of our revenue now, substantially less, is attributable to the cash market. And an increasing percentage is attributable either to commodities from LME, which accounts for about 20% of our revenue, or to our derivatives business, which, as Charles alluded to earlier, has seen a significant uplift, particularly in the futures, the index futures. In order to explain this, we've done a new slide, which I hope will enable you to see where the changes have taken place. These numbers can be derived from our announcement, so if you want to get into the numbers, you can recreate this chart. But what it shows clearly, I think, is that the cash market has dropped considerably. No big surprise. Included in that are CBBCs and derivative warrants. But on the futures exchange, we've seen a very significant increase. We've seen a 34% jump in income on the futures exchange. The bulk of that relating to index futures and options, so the Hang Seng Index and futures options. And the mix of our products in that space has also changed, so that the higher profit products form a greater percentage. So we've seen a very significant step up, and that's consistent with the first quarter, And what we've seen now, and I'll get to it on the next slide, is that our derivatives business is actually earning us the same amount of money as it was last year. And given the volumes we had last year, that's a pretty impressive performance. To look very briefly at the performance by segment, as I said, overall we're down 7%. That's against an 8% increase this time last year, so we're returning to the norm. No surprise, cash equity is down. Equity and financial derivatives, as I said, broadly the same as last year, and given the volumes last year, that's a very big uptick. Commodities, LME volumes are down, I think as everyone's aware from the press. Commodities are facing a difficult time. We also have some project costs in there. You'll see in our report that we are developing a new commodities exchange, so there's additional OPEX costs in there. Clearing, largely following the downturn in the cash market. And platform and infrastructure, we've had a little bit of an uptick through greater usage of our networks. Operating expenses, I think, is a good story. As I said at the outset, if you back out the exceptional items, we've only had a 2% overall increase in OPEX. As it splits across the page here, staff costs are obviously the biggest part. We've managed headcount. We've had a small increase in headcount, but we've managed to keep our staff costs well below last year. In part, that's due to the variable element of accruals for bonuses, etc., that's in there, but overall, keeping under control. And as you look across the page, legal and professional fees are up a little bit. That's due to initiatives, nothing to do with litigation. Other operating expenses, once you back out the Lehman adjustment, are actually flat. So tough times, we're keeping OPEX under control is the message. This is the quarterly trend I talked about. And actually, quarter two was higher than quarter one, and that's due to seasonal factors. Our depository, custody, and nominee fees seasonally always come through higher in the second quarter, and we had 290 million of additional income as a result of that. Costs are actually slightly down. But the important thing on this chart, I believe, is the dotted line, where I said the trend line, with that blip in 2015. And that's what makes the comps for quarter two and for quarter one and the first half this year so difficult, because we're comparing to that lump that came through in 2015. So whilst we're very grateful for it, it makes the comps this year quite difficult. Final slide, balance sheet, no real change. Just to reiterate, we continue to have a very strong balance sheet, very low debt, 11% debt to equity. We've increased our shareholders' funds slightly due to retained earnings, but otherwise no change. Over to you, Charles.
Thank you, Paul. Next, I wanted to give everybody a very quick business update about the first half, what we have done. As you can see, it's really product, infrastructure, and platform. The first half of this year, we largely, this is a pretty big year for products. So we have launched the sector index futures, so 7 new contracts launched on May the 9th. We also have launched 4 new pairs of renminbi currency futures that began to trade on May 30th. Some of them are trading a lot more active than others, but we start to see a very solid trending line moving up. For the first time in Hong Kong, we have now launched 4 leveraged inverse ETFs. This is a very big development, and a lot of you probably wanted to take a look at this space. This is going to be a potentially quite interesting new areas of growth for our market. LME announced on August the 9th, just a couple of days ago, LME precious basically is gold. And I think this is going to be a very important development. As you all know, we're going to do gold in Hong Kong, but now we are starting in London. In the coming weeks and months of the balance of the year, and possibly some of them may move beyond the end of the year, we are now focusing, we are launching this month, in August, cross-currency swaps. This is the first time that we're going to see some real business over time with OTC Clear. This is really a very big growth area into the future, and we're the first bank, or first OTC globally to begin to really clear this sort of swaps. Most of the swaps currently are not really bilaterally structured, is not really cleared by CCP. We are also, on September the 5th, we're going to launch mini H-share index options. Again, very new initiative. On the fourth calendar month contract for HSI and HSI options, this is going to be something that we're going to be launching in November. We also talked about the renminbi gold futures, physical delivered gold futures, whether you think this is a commodity product or whether you think it's a currency product, depending on your perspective. And we are also looking at other interest rate and Forex products as well. On the market infrastructure and platform-wise, we also had a very busy first half. The volume may not be there, but volume is not the only story. Sometimes when you have this sort of a volume, and then you actually start to really look at the underlying market. We're actually making a lot of changes in the underlying market. First of all, the SPSA model for Stock Connect. This is really the clearing model that we have been trying to launch for major investors, who have issues with the way that when Connect was initially launched, because of the differences between our clearing model and China, and there is a very, very big distinction and difference. And so this helps harmonize the two markets. We also launched pre-trade risk management. This is something that is not sexy, but is something very important, protecting the soundness of our market. And for a long time in the coming, we finally launched the closing auctions. This is a very big, advance to our market. I think, most of our clients know how important and, how difficult it is for us to finally come after a very long haul. As you know, we never had it before, then we had it briefly, and then we had an accident, and then we terminated, and then we waited for, close to, 6-7 years now, then we're finally launching it again. And it's working great because we never heard about it. Nobody talked about it. That means that it's a great success. LME warehouse consultation pretty much completed. And now we have now received licenses from the Singapore Monetary Authority as a recognized market operator in Singapore. So we will be able to conduct business. Both LME already have an office there, and we on exchange will now also have a license to operate in Singapore. And we have implemented a fee and initial margin rebalancing on some of the contracts in LME that hopefully help us to rejuvenate the market. In the coming weeks and months, big things that you should be watching out on the market infrastructure-wise. Volatility control mechanism, VCM, is coming. And later this month, we're going to launch for the first time in Hong Kong again, VCM. A lot of people initially didn't have a very good understanding of it. And I think people now have a much better understanding. But if you have any questions, I'd be very happy to answer them. But it's coming. This is going to be, again, one feature that will help this market to maintain stability, particularly in very significant market volatilities. Stock option position limit revamp. Again, not sexy for the broader public, but it's very important for a lot of derivative traders and members. And after long efforts, we finally are making great progress there. Our cash trading platform upgrade, which has been going on for almost 2 years now, continues and is making great progress. So, as we all talked about before, our next generation clearing platform, which we have been taking a lot of time thinking through what we really wanted to do. And now we finally are coming to a point that we are almost ready to begin that process because we have a much better understanding today as to what our future clearing has to be. Because we have to consider what we have today, what's the future opportunities. We have to consider us vis-a-vis global changes. We have to consider today's regulatory environment against tomorrow's. We have to consider about China connecting with the rest. We have to think about today's technology. We have to think about fintech. We have to think about blockchain. So many of the things that we have to consolidate into a holistic review because we don't want to go ahead and spend a lot of money building another shining box, but essentially doing the same thing. We have to be prepared for the future. We are now taking the time to get everything ready. As you know, as you can see, most of the time people talk about trading volumes, but we're doing a lot of things in terms of products, in terms of platform, in terms of infrastructure to make sure that in the future, when new money comes, when economic activities resume, when trading become more active than today, and when we have more different kind of customers start to come to Hong Kong, our platform is ready and our products are ready. Very brief, quick update on our strategy. Our strategy, as you all know, is about connection. It's about connectivity. It's about bringing a different kind of people, a different kind of investor, and different kind of product to Hong Kong, and connecting the two universes that we are sitting in the middle of. On the left here is all the initiatives that we announced in the strategic plan. On the right is some of the things that you should be watching to come. On the equity front, early in the year, we said we're going to begin to think about primary connect. We think we're going to talk about, we wanted to, aspiration-wise, we want to pursue Asia derivative. We want, there is a joint efforts between the SFC and the exchange to look at listing regime reform. And we were also looking at the possibility and the potential of a new board. We called a third board. We were told not to call it a third board, but whether it's a second or third or fourth or fifth, so just new or alternative or potential remain to be seen. But these are the things that we put into our strategic plan as the things that we wanted to look at it. And obviously, our stakeholders have different priorities sometimes and have a different timing. So we are now working with them. So on Primary Connect and Asia underlying derivatives, we continue to advocate with relevant regulators and relevant authorities and to essentially establish and demonstrate both the usefulness and the relevance and the significance to Hong Kong as a future financial center. At the same time, the feasibilities, the implications, and the regulatory issues and operational issues that need to be sorted out. So it's a continued discussion process with our key regulators. On the listing reform and potential new board, we have a consultation going, and it's going to run its natural full course. And in terms of the new board, it's still in conceptual development stage and continue to be discussing with relevant stakeholders. And that process will continue, and we'll update you when we begin to have more tangible progress to report. On FIC, fixed income and currency, I think we have talked about it earlier that this year so far we have completed a full set of currency derivatives, and we have more to come, and more different conceptual ways for us to develop that. You will also begin to hear more in the coming months about our fixed income aspirations and progress. And we talked about the building a bond connect. We're making good progress, having very close consultation with regulators and stakeholders. And we are also planning to launch Treasury bond futures, T-bond futures. This is going to be a huge future significance for Hong Kong, because fixed income ultimately is the largest market, and we are only at the very, very early stage of that development. So we are still working with our regulatory, begin regulatory preparation, and we'll continue to discuss with our regulators. A lot of this require us to think through in Hong Kong for the first time how currency futures work, how bond futures work, and how cross-border connect works, and how cross-border or cash-settled or otherwise futures work. So a lot of work to be done, but we are pushing aggressively forward. On the commodity front, international and onshore China is really the two key themes. International, on LME Clear, As you know, that commercialization, the first stage of commercialization is completed, and now we are consolidating the gains of the commercialization, including by looking at some of the tweaks that we would like to implement that could potentially help us rebalancing some of the charges that we are charging at different parts of LME, and that hopefully allow us to optimize the volume so that we can stimulate more volume, particularly through OTC and through short-dated carry trade, allow us to rejuvenate the trading volume in those areas. LME Clear, when we are pushing hard in the coming months and year into OTC Clear. We built a first-class clearinghouse that currently only clear our own products. We believe there's massive opportunities on the OTC front, and it is there the LME Clear is going to push harder and harder. For LME, we are also begin much more pronounced and progress in terms of accessing to onshore capabilities, both in terms of warehouses and possibilities of liquidity. And I think it's not easy. It's not going to be a short push, but I think we are beginning to really making very tangible efforts there, and including we're using a different kind of products. The LME warehouses is the typical traditional LME swap, and but now we are also introducing a new product called LME Shield, which is really not for the standardized contract warehouses. This is really the non-standardized warehouse receipts that we are creating a registration transfer system, and that the banks, particularly Chinese banks, are using that as a great opportunity for the entire sector to look back at bank financing for commodities after Qingdao, which was the event that essentially shut down a lot of activities. And now those activities are likely going to come back. LME Shield is going to play a very important role in revitalizing that efforts. Our onshore spot platform is really the a lot of the effort is invested there, and our system development work is near completion. And I think in about a month's time, we should be in a position to begin testing, user acceptance testing, in Shanghai, and then the first quarter we're going to have a whole market testing with many of the customers that are likely going to be using that platform. So user acceptance testing to begin the first on the fourth quarter, and the warehouse negotiation. We already now begin a market survey on warehouses, having preliminary discussions. We anticipate that serious warehouse negotiation and rule engagement and signing up and onboarding will begin, after the fourth quarter of this year. We continue to be on target of launching our Shanghai platform. We call that Shanghai HKEX. Here is HKEX, and that's Hong Kong Shanghai Exchange, and that will begin. We will launch that service and market before LME Week Asia next summer. So that's really is all I wanted to talk about on the business update and strategic update. And with that, I can open the floor up for questions.
Thank you, Charles, and thank you, Paul. Okay, I saw the lady here in the second row had her hand up very quickly, so maybe let her go first today.
小亮你好，我是现代记者。Hi, my name is Ailing. I have two questions. First of all, you didn't talk much about Hong Kong Shenzhen Connect. In your upcoming strategy overview, we didn't touch much about Hong Kong Shenzhen Connect, because it would need 3 to 4 months for preparation and in the beginning of the year, and we thought that it would open up in around August. So we want to know what the progress is. And the second question is about probably the regulation reform which is in discussion with the SFC. So is this actually a game of power? Or so what is your attitude from the perspective of the Hong Kong Exchange? And so what is the consultation process in right now? Well, yes, I didn't put the Hong Kong Shenzhen Connect here, but it doesn't mean that we are not going to go ahead with it. You might think that we didn't put it in, even though it should be amongst the top priority list. But since, we're going to go ahead with it anyways, that's why I thought we don't need to put it in. Well, there's not a lot of news about it, which means that news should be coming near and fast. Regarding the second question, on the consultation, it has already begun. This is actually a joint consultation with Hong Kong Exchange working together with the SFC. So this is not something that we don't have our perspective, but because it is a joint consultation, we're working on this together. Well, usually we don't want to comment too much on consultation because we're trying to reflect all our views. We hope that we would take the opportunity of this consultation to discuss and talk about all our views and our thoughts. And when we are towards the completion of this process, then we will look into what all the opinions and views are before we come up with a final report or conclusion on this discussion and consultation. And if it needs to be successful, then of course there needs to be some kind of change or reform. This is a genuine consultation, I can assure you. There have been many views on the side of the FSC, but we don't have much to add on right now. Thank you.
Thank you very much. This is Yopun from HSBC. I have two questions. One is that can I please specifically ask about the Asia Equity Index future? Is there any new update about this move? Or actually, do we need to wait for the market to revive in China before seeing any move from you on the Asia Equity Index future? The second question is about LME. So LME has announced to reduce the fee for member stock day carriers. We want to know a bit more about the revenue impact. So can you please tell us, what's the percentage of this impacted trade as a percentage of total turnover? And then also on the precious metal contract.
Are those two questions?
Two sets of questions, maybe.
Okay, two sets of questions. Okay, yeah. Okay, finish
Okay,
that.
thank you. Many exchanges, to be honest, have tried to launch the gold contracts in the past, but not many successful experience, right? So what makes you to think that you are much more well-prepared this time than the others? Thank you.
Okay. I think on the Asia underlying, I don't want to discuss very specifically where we are and what are the hurdles, or what are the discussion, what's the progress we're making. It's just sufficient to say it is a very important aspiration. It is something that we have been focused on for a while. It is something that we're making progress. And I do not believe at this point that there is a necessary link between what will happen, in an onshore context vis-a-vis an offshore context. And in fact, up to today, the offshore market has been largely an offshore market, cash settled, and the onshore has its own dynamics and its own policy implications. And I do not believe, and I hope that these two are not necessarily linked. And right now we're operating on the basis that they are not. In terms of the LME, as I talked about it, the LME commercialization is completed. We're very happy. We brought an old line membership-owned, exchange to truly a global exchange. That obviously involved in the commercialization of all the fees. And that obviously today, when you change the fees, for the whole market, and you always do periodical reviews as to how effective those fees are. I mean, the fee is really a function of two things. One is between the members and the exchange, there has to be a fair distribution and allocation of profit. And the members obviously always want lower fees. The exchange always want higher fees, and we need to find the right middle ground. And not only that, and I think today nobody is discussing whether the exchange is making too much money or the members are making too much money, and we need to somehow rebalancing that fee pool. That's not the issue. The issue is, everybody think is broadly fair, but the issue is, what's the best way for us to structure the various points of charges that is the most effective for everybody? Because LME is a very complex ecosystem, and because it's a date prompt contracts, and it has a 3-month contract, and is really used by physical users as well as financial users, as well as a lot of other people who use the market, and they're very complicated. Unlike CME or Shanghai Future Exchange, it's a very simple monthly contract. Here, the reason it has this great core competitiveness is because of the day structure and the membership structure, the warehouse structure. So I think the fees on the short carries in particular is a very sensitive point, and we decided that if we tweak the fees there, we potentially could change the dynamics of the volume. Nobody can guarantee that if you lower fee here, the volume will go up, but clearly it will help, and we're hoping that there will be that sort of a relationship. So at this point, I don't really think I wanted to get into theoretically, if everything is exactly the same, how much fees you're going to get, how much revenue you're going to lose, how much revenue you're going to gain. And I think it's sufficient to say that even in the static, exactly the same situation, we're not really talking about serious issues here. But we do believe that even with the worst case scenario in our mind, that the volume improvement could be something that you can, that we expect that will come. So at this point, I think that's as much as I wanted to give it to you. If Paul and Gary wants to give them greater guidance, you'll feel free to do so at your risk. Oh, you have another question. Gold. Gary, you want to talk about why you think you can do gold? I can talk about why we can do gold here in Hong Kong. In Hong Kong, our gold, physical settled gold, is going to be different because, number one, this time it's physically settled. It's more complex, which means that the product is more reliable. The price will converge. The price, will be honest, is not going to be all speculative. So that's very important in Hong Kong, why we think it's going to work. Second, the reason it's going to work here is our gold here is not a pure gold contract per se. It's not just a commodity contract. Actually, it's a contract you can purchase gold futures, you can trade gold futures with a currency choice. You can trade renminbi, you can trade US dollar. That actually, in many ways, embedded in that contract is also a currency trading contract. So because of that, we think in this environment where interest rate, exchange rate are extremely sensitive, and with global commodity prices, with gold prices, with China open, slowing, that create this great environment for Hong Kong to be in that territory, to be able to capture the various things that impact gold prices, and interest rate and exchange rate forward outlook will allow a lot of people to play with that product. It may take a while for people to get used to it, but I do believe we'll potentially have a lot of users. And the moment you start to push one, and then investors are likely going to be taking on the other side. So I think that's give us a lot of confidence why it's going to work. Gary, you want to quickly talk about why in London it's going to work?
Sure. The London initiative is called LME Precious, and the important thing is that it's a collaboration between the World Gold Council, a collector of bullion banks, and ourselves. So there are 8 different partners in this venture. So it's an industry-led initiative. Secondly, London is the centre of the OTC trading market in gold. And thirdly, there are significant capital issues with holding commodities now for all of the major banks. And so for the first time, we're going to offer a centralised marketplace with a clearinghouse to trade spot gold, Tom Next, and then a date structure, a little bit similar to the LME, out to 26 days, and then from then onwards, a futures contract on a monthly basis. So it brings together everything from spot, Tom next, the date structure, and the futures contract, all centrally cleared. Significant capital savings for the major players. And I think that LME, as the world's leading metal exchange, is well placed to do this. It was chosen by the World Coal Council and the banks to be the partner in a competitive RFP later last year. And it's a very exciting development. It's the first time this has been done anywhere. And actually is a good parallel to what's happening in Hong Kong, which is a different structure, includes RMB and dollars, and there's no reason why they can't coexist. So the important point is industry collaboration. We were chosen to bring this forward. We're best placed, we have a metals clearinghouse, it's all ready to go, and all the major players are already connected to the market.
I think there was maybe a question on the far side. Maybe Bosco had a question before, is that right?
Decided not to, right? You know, I'm not going to answer the question you were asking.
Okay.
You're going to try again?
Yeah. As Mr. Vincent Lee, one of the INED of the stock exchange, has told us before that he never heard any supporting views on the listing between reform proposal from the exchange board members and the senior management. Do you think that he's talking about you? And actually, what is your personal view on this proposal? I know that, as you said, that it is not a very good time to comment anything within the during the consultation, but we can see that the SFC CEO also come to see us and talk about what he's thinking. So I think you can also give us more colors on this. Thank you.
Yeah. I think I will not comment on individual commentators' comments. And I think, as I said, it's a joint consultation. It's a genuine consultation. And we would rather not comment in the consultation. But in terms of the proceedings of the exchange, we already talked about it, that it is approved by the Stock Exchange of Hong Kong, which is really the stock exchange. And this is not something that is technically required to be approved by the group board, but the group board has discussed it extensively and with the management, and has agreed, and is supportive for the publication of the consultation. Again, it's a consultation, and the consultation is a genuine consultation, which means that we will treasure and value inputs from the market, but the market has to put input into the consultation.
We have, Charles, an online question from the webcast participant. Ms. Desai of Reuters, who's based overseas, asks, and this may be a question for you or you and Gary, or maybe just Gary. Our sources are telling us that the LME fee cut for members' short-dated carries will make only a marginal difference to their costs, and that it does nothing for clients, many of which are choosing to go OTC or to rival exchanges. Why didn't LME make deeper cuts to halt the volume slide? And why didn't the LME cut fees for clients? So, a bit of a long LME fee.
Yeah,
question.
Very interesting. And if we do it for free, does that really solve the industry problem? The answer is probably not. The answer is definitely not. So I don't think there's a whole lot I wanted to answer on that question.
Okay, then back to the floor. Maybe the lady in the center here with the, I think, pink dress and white blouse.
Yeah, 我是电视的记者陈道俊。
I'm Chen Nojun from TVB. I'd like to ask, at the moment the industry is not looking great. So for second half of the year, do you think the profit of Hong Kong Exchange will be put under pressure? And second, in the first half of the year, the stock price has been volatile. Would it stabilize in the second half? And thirdly, with Hong Kong Shenzhen Stock Exchange, will that help with the stock price of Hong Kong exchanges? I think the second half will obviously compare with second half of last year, so you should be able to know the direction. At the moment, we can't really see, what events could possibly affect the trend of our price, going forward. And we can't see any worsening signals in terms of volatility. Hong Kong's volatility is connected with everything else going on in the world. So at the moment, the big volatility, you can see with our derivatives, the trading volume is actually increasing. So all the volatility is contributing to the volume growth of derivatives. So that is why we have been trying our hardest to diversify our products. In the past, we have solely relied on cash equity ADTs, and today we're actually using a lot of derivatives. We have, with more of these products, if one thing doesn't go well, we'll have another product that will help us to make money, and overall we'll still be looking good.
We've not been here for a while. Anyone? Okay, maybe the lady here in navy blue.
Thank you. It's Sarah Tian from CICC. Just a quick follow-up on the previous question on LME's fee change. Just want to check. So I understand that we want to achieve these fair allocation of profits after fully commercialization of LME. But in terms of margin, how is there any kind of a target or internal indicator that we are looking to make sure that the fee cut actually is benefiting our bottom line growth in LME? Thanks.
Yes. I think when you obviously are looking at your own financial planning and your business pricing tariff policies, you consider a variety of factors. You can not only consider your own margins. We obviously all want to have very fat, big margins. On the other hand, you also the most relevant and the most important in the marketplace, in a competitive market, when you're not a monopoly, when you are not able to set prices free, is really look at a competitive pricing environment, and we believe the LME pricing system is competitive. And there are different changes. Obviously, it's apples and oranges, and sometimes not that entirely clear. Sometimes people find different ways to compare them, and it's make a different judgment. But broadly speaking, we're very comfortable that we are adopting a pricing system that is fair, that is competitive, that is constantly being reviewed. And in terms of the actual margins, I think we are also looking at the broader benchmarks of other exchanges' margins, and I think we are very much in line with them. We're not, obviously LME is a story that pre-commercialization, you have a very different margin than today. But today, at the commercialized the LME, our margin is, broadly speaking, comparable to our peers. And I think, so the key adjustment here today has nothing to do with, trying to, to make things fair. We think we're charging too much and people really need it. It's really about finding the right spot where you want to use the fee as a lever to stimulate trading, or not to discourage trading, because the LME short carry trade is a very important, element of the LME dynamic LME system. And I think that's the area that we would like to see a lot of activities which will have a knock-on effect on overall volume, not necessarily, on Tom-Next or short carry trade. Maybe by year end, the money we're getting there may not be necessarily clearly, telling us in granular detail that this translated into volume increase, but we believe it will have significant knock-on effect on the overall ecosystem in terms of the activities levels of the trading, which obviously benefit the overall economic packages, for LME, both for our customers and for ourselves.
Back to the far side, I think Bowen in the front row, white shirt.
Hi, Charles. This is Bowen from Mingpao. Just a quick question. Because you've said that
From
Mingpao. Yeah, because you've said that the SFC is the big boss earlier, and the CEO of SFC actually has praised that you have a great turn of phrase. So I would like to ask if you want to respond to his praise.
Thank you.
Okay, I guess maybe Yan.
No, thank him. If I see him, I will say thank you.
Maybe Yan in the second row. I think her hand was up. Navy blue.
Good afternoon, Charles. I have a question. The big boss from SFC, it says that the consultation, this is not a referendum. This is not about counting the votes. What is your view on this? Do you think we will follow them? What are your views? So in the new advice, under the new guidance, what role are you going to play for the IPO committee? What's this first question? I can't remember it. When we're doing the consultation, especially for market structure, there are many different things, we cannot quantify it. We need to do a lot of analysis, both quantitative and qualitative. So it is very difficult, for different consultation. Are you counting, 20 people or 20 companies? And for all the market consultations in Hong Kong, we all have to go through the same issue. I don't think in the past it's been a game of figures, and now today it's not. In Hong Kong, for the consultation, we have done it for so many years, different areas, there is a very clear procedure. It is impossible that after the consultation, I can make up whatever I want to go ahead with. In Hong Kong Exchange, everything we will need to put the consultation result on the website. You can go and read it yourself. You can see who said what and at what time. We need to make a summary, a consultation conclusion. The market will be able to see whether your conclusion is fair or not. Therefore, we have been doing so much consultation. We need to be able to go through the test every time. And I don't think this time's consultation is any different from the previous consultations. I forgot about the second question. It is quite likely that I tend to forget the questions that I don't like. So for the committee for IPO, there are 28 people in total, so 27 out of them, I'm one of them, one of 28 listing committee, and 27 of them, they are the brightest talent in Hong Kong, and a lot of them, they don't actually make any money every Thursday, and basically they are working for free, and they have brought a very unique regulatory method to Hong Kong. They are giving their wisdom, their love to Hong Kong. If we allow them, or if you ever have the opportunity to go and visit them at work on Thursday afternoon, you'll see these people, they're working very hard, They are totally non-related to these cases because we won't invite people with interest of conflict to come here. For the listing division at Hong Kong Exchange, they need to report to the listing committee. So these listing committee members, they are the teachers of us and they're the mentors. We are very lucky and we are very appreciative for their contribution, and we also hope that their contribution could be continued in the future. Thank you.
Very back, and I think the dark jacket.
From Cable 2 TV, I have two questions. Last, I want to know whether there are any new plans. And I want to ask about the primary connect. This the primary connect that you've just talked about. We see that A shares are becoming slower in speed. So I want to know our regulators, FFC. It seems that they are quite. They actually have a strong stance. So do you actually have a timeline that you can share with us? First of all, for the quota, yes, we understand that we have fewer and fewer quota. It shouldn't be a problem because it wasn't a problem before. If the Hong Kong-Shenzhen Connect can commence very soon, then it would resolve all the issues. But if Hong Kong-Shenzhen Connect is not able to commence before the quota is filled out, then of course, there would be problems. But I don't think it should be a problem. Well, if, because of quota, we are not able to trade, this is not something we want to see. I don't want to talk too much about the primary connect here. Primary connect is a long-term strategy for the future of Hong Kong. But you must have full understanding, and we must have consensus and to understand the full impact it has on us before we can move this forward. We are very confident in all our regulators, all our stakeholders. Therefore, we must be patient to try to reflect our views, our ideas, our concepts into strategies. This is not something that can be successful overnight. The Shanghai-Hong Kong Connect took a long time, and we've talked about a Hong Kong-Shenzhen Connect for a long time. So I think we have to take this step by step. Do you have more of a specific the Hong Kong Connect? What, do you have a timeline? Well, of course, we want to wait for the Hong Kong Shenzhen Connect to start as soon as possible, but we don't know what's going to bring. But I don't think these issues would be present once Hong Kong Shenzhen Connect begins. So there shouldn't be a quota problem once we have this in place. Though I know I'm being very vague here, but but I'm trying not to be specific here. Sorry.
Webcast. We have a couple of webcast questions, and these may be for Gary. I'm not sure. Charles will read them out. One is from a Deutsche Bank analyst. Any update on LME's trading disruption in July? Did you submit a report to regulators? Do you foresee any costs involved with IT upgrades related to the incident? So is that a Gary question?
First of all, any outage is reported to the regulator as a matter of course. I think the incident you're referring to was simply a network decline by one of the network partners. It's nothing to do with LME systems or anything else. So it didn't involve any change of system, any upgrade or anything else. It's simply a network partner who also had affectations at other exchanges as well.
We can just stand by, Gary. Another online question, another LME, if you don't mind. Fast Markets is asking, incentive schemes, part of the decline in fees for LME. Are you able to break down what these amounted to, how successful the schemes have been in terms of business? So the incentive schemes, I guess, affect on the bottom line.
Okay, there's several incentive schemes. Exchanges often bring incentive schemes to bear to channel growth in different areas. The LME has several of these schemes. The first one is a new member scheme, where people who haven't traded with the exchange before get a period of time where they get free fees, and then they pay fees over time. That's been very successful. We have 300 separate individual traders who have signed up, for more than 300 actually, have signed up to the scheme. And the litmus test is, has the volume increased, and has the volume, do they start paying when they have to pay? And the answer to both those questions is yes. So I think client volume on the electronic system is up around 18% year on year, so it's been successful. Then we have another scheme called Liquidity Provider, which is, again, for end users who, above a certain level of trading, get reduced fees for the size of trades they do. Again, a number of people have taken advantage of that. And thirdly, we have incentives for market makers, particularly in areas that are less liquid. And again, people tell us that the liquidity on the system, the bid-offer spread and the tightness of the markets has improved considerably as a result of that. It's hard to give an exact figure because if someone's not paying a fee, they're not paying a fee. There's often a trade on the other side that is paid. So I don't have any breakdown in terms of absolute numbers, but we are quite pleased. The important thing is that all these schemes are just to describe, particularly the new partnership one, is both for the third Wednesday and for the 3 month. And so right across the curve, and at the moment most of that liquidity increase has been in the 3 month because that is the most liquid part of the curve. Thank you.
Great, thanks. We saw,
I think when they talk about the financial impact, one thing to note importantly is that all the incentive is about, at worst, not taking fees from them. We're never really going to throw money back at, so it's never going to hurt us because we're not paying anybody for anything out of our own pocket in terms of cost.
I think we saw Betty on the far side, front row, had a question.
Yes, Charles. Recently, the small cap stocks and the GEM are very volatile every day. What can the exchange do to cope with this sort of problem before the formal consultation begins?
You mean the small cap going up, share price going up? Well, I think, well, when the stock goes up, in the absence of evidence of any wrongdoing, the stock going up itself obviously is not a problem in and of itself. And, but obviously when the stock is going up 5 times, clearly you probably, think it's not normal. I don't think I want to comment on specific cases because when something happened like that, if there is suspicion of market manipulation and misconduct, and obviously the regulator, including ourselves, but more importantly the SFC, would have enforcement actions, and I'm sure investigation will ensue. But I think we talked quite a bit about the listing reform and the consultation. I think people didn't ask, which we put into the result announcement, is really people need to look at the number of things that we're doing in a holistic context. Whether or not the listing regime reform that we talked about, that's one thing, and GEM. Sort of a GEM, whether there anything we should be doing, to improve GEM, whether or not, backdoor listing should be looked at it, whether or not delisting should be looked at it, whether or not some of the loan suspensions need to be, look at it. And we also talk about potentially new board, for potentially new companies, but, what's the implication if you do that? And so a lot of this, many of them have both a regulatory connotation and a development connotation. Some of them have a China connotation, some of them a Hong Kong connotation, some of them an international connotation, some have a very local Hong Kong connotation. So I think we should be looking at, over the last 6 months and continuously over the next, 6 to 12, 18 months, we'll continue to be looking at all these things in a holistic manner. All of that, including the issues you talked about, is for purposes of improving overall quality of the market, not only in terms of for the investors who are already invested in those companies. We want to make sure that higher quality and that there is no misconduct, but also trying to make our overall regime more attractive for good companies, at the same time wanting to make sure that we do not also inadvertently encourage the wrong companies to be here, and if they happen eventually come here, and there are ways for us to be able to deal with them. So I think I think you should be looking at the various listing-related measures in its overall context. That is all moving in that direction. But one thing is clear, in Hong Kong, whatever we are doing, it's generally speaking is about new directions and new businesses, and anything that is legally conducted under the existing rules and regime, obviously we do not believe in retroactive application of any changes. So I think whatever happens in the market, And as long, under today's regime, that's not the purpose for us to go back and try to change something that is already here. We are really talking about changes into the future. And anything today is about whether or not there is market misconduct, whether or not there's a disorderly trading, and whether or not there are enforcement actions. They need to be taken full, based on evidence of clear wrongdoing. But in terms of actually business conducted currently under the existing regime, in legal and in compliance, I don't really think anybody's talking about changing any of that.
We have time for a couple more questions. First is going to be coming from the internet, an analyst with JP Morgan. 2 questions. One, how should we think about CNY IRS, I think interest rate swaps, over the next 2-3 years in terms of preparations that HKEX needs to make and macro prerequisites? That's one. His second question is, have LME warehouses based on the mainland been approved? And if so, what's the timeline for that to go live?
Yeah, I think in terms of interest rate, I think we already talked about the currency interest rate swaps on the OTC clear side, but I think on the trading side, we probably will start with T-bond futures, and whether or not I think the T-bond futures is probably for onshore issuers, whether that's small, whether that's corporate, whether that's financial institutions, remain to be seen. But I think we want to start the Cash Connect first, Cash Bond Connect, and then hopefully shortly after that we are able to launch T-bond futures. In terms of warehouses, I think we're making great progress on LME Shield, but this is not about warehouse delivered for purposes of settling futures contracts. This is all about non-standardized warehouse receipts that basically have an LME quality warranty on it. And I think that is giving the banking sector and many of the trading companies, many of the commodity players in China renewed interest in looking at commodity trade financing. And but in terms of the actual LME warehouse, onshore warehouse, particularly bonded warehouses for purposes of settling LME futures contract, that is a longer and more complex discussion with the regulators. And I think it's a very binary result. It's not like going to be, okay, we have one warehouses, you can do it this year, another 2 next year, another 3 next year. You either can do it now or you cannot do it. And if you can do it, you can do it with anybody and everybody. And if you can't do it, you cannot do it with nobody. So I think it's a pretty binary impact. And we're having that conversation, and we believe that we're making good, tangible progress.
We have one more question. I saw Ed from Bloomberg in the back.
Bloomberg, thank you very much for this opportunity. I just wanted to go back to the joint consultation because the way it's designed, basically, I understand that it gives control more to the SFC. And I wonder sort of why you agreed to do this, to go into this consultation. I understand that results may be different, but still, the way it's outlined. And also wanted to ask you sort of what changes and reforms you mentioned earlier today are necessary in this field. Thank you.
Unnecessary or are necessary? Which one are necessary? Oh, okay. I think my comments on the consultation is sufficient, and I don't really believe I wanted to further elaborate. Clearly, we all have very different views about different things in life, and our views and the SFC views are not going to be exactly the same on every single issue, but it is, at the end of the day, a joint consultation. And so, we clearly are seeing enough reasons for us to agree that that is something that we can present to the market on a joint basis for the market to comment and feedback. And then we can take those feedbacks as a genuine consultation. And it's not a fake consultation that some people may have, thought, or criticized. Obviously, all the things that we choose to do in improving the market are necessary. So maybe I misunderstood what your questions are, because if we know something is unnecessary, it's unlikely that we're going to go ahead and do it. So maybe if you wanted to have a...
I think when it was translated, you said that there are some changes which are required and some reforms required, and I just wanted to ask you basically.
Well, yeah, I mean, we obviously have done a number of things for the listing division, regarding loan suspensions, regarding backdoor listing, and regarding cash companies, and I think those are the things that some of them involving clarify the rules. And some of them, involving, accelerating, certain actions. And so I think those are the things that you can change through guidance letters and through other means without necessarily have to go back and change the listing rules, which typically require you to go through a more elaborated processes of consultation.
Okay, thank you, Charles. Thank you, everyone. We'll wrap it up there, and thank you for joining us, and see you next time.
Thank you very much. Today, I know everybody is a little bit quiet, and hopefully we have better and more exciting things to report the next time we see each other.